big week next week here on Tesla. You can see on the weekly chart, first thing sticks out, obviously, this upper trend line here, how harsh it is and how we've been respecting it for the past 3 weeks with these long upper wicks on all of these candles. We currently opened up above it or right at this trend line this past week, and it looks like we're going to close basically right around this 249 area, if not just a little bit below it. That's where we're currently trading today. And it looks like we're going to respect this. But next week, we're either going to be gapping up and staying above it, or we're going to be below it and then trying to break it as we run into earnings. We have earnings coming up next Tuesday after market. So that's why we're saying it's going to be a big week next week for Tesla. And obviously, the second thing that sticks out, this 9-day EMA getting very tight here with this 200 SMA. That is going to be something that we need to watch. So you see how tight these moving averages get, and then how jumbled all these candles get right around a certain area. So you can see it happen here. And if you go back, it happened right around here as well with these moving averages. So we're going to be watching this 200 SMA here. That's a purple line here, and this 9-day EMA to see how close they're going to get as far as where we're going to gap up or gap down on next week. See where we're going to open at. And it's all going to be right at that 249 level. You have your 9-day EMA trading at 271, your 200 SMAs trading at 249. You have that fib level 61.8 right at that 249 area too. So basically chalk it up. Let's just call it 250. Make it easy for everybody in here. 250 is going to be your magic number heading into earnings next week. Everybody's pricing in right around a $27 expected move by next Friday's expiration. So that's not the move that's expected over earnings, right? So that's not what the volatility is just for earnings or expected move from earnings or anything like that, or the EPS has nothing to do with that. That is the expected move. The options, everybody's pricing in for the options as far as your next Friday's expiration. So the move that the stock underlying asset will make by next Friday's options expiration cycle. Now, as far as being under that 249, what are we looking at? Well, support wise, you're going to have a little bit of something right here at the 220s. And then down here, you really have nothing until you get to this 185 level. So really, that's kind of on the table. We get a nice 2 times expected move as far as Tesla. And we could be down right around here, especially with earnings going into next week. But again, I don't think we're gonna get down there. Like 200 is going to be a nice psychological level for us, so it looks like that will hold, especially with our RSI down as low as it is, and we're not on that great volume either. So we have to take that all into consideration. Resistance wise, obviously, this upper trend line here is going to be a resistance that we're watching above that 249 level. That's currently going to be trading right around that 259. And then above that, it is going to be this 295 area up here, which is your 50% fib level. So obviously, all of those are on the table. Those 3 points that we just mentioned, they are all on the table by next Friday. So we have to keep that in mind as we are kind of playing this and watching this run coming up into earnings. And actually, if we look at our options expiration for your April 25th. So that is what's going to contain the option cycle. Your delta, if you go to a 30 delta put, it's trading for right around 885. If you get a 30 delta call, it's trading for right around 575. So put skew in here as far as your calls relative, how much they cost relative to your cost of your puts in there. So normative skew. So your risk is on the downside here for Tesla heading into earnings, which is different because usually heading into earnings, your risk is always on the downside, the put side. So your risk is on, your risk is on the downside. Usually your risk is on the high side, the upper side, right? So it's on the call side. So your risk is on the downside in here. So that is going to be a normative skew for us. So that is interesting to say the least as we're heading into earnings. But of course, again, that's going off today. We had a big dump in here today. So obviously all the puts in here got juiced because everybody was kind of basically buying them up. So all in all, Tesla, looking at this harsh trend line here, we're going to see where we're at on the weekly. 250 is going to be the major number that we are going to watch. And again, you have right around a $27 expected move going into next week. And you can see on the daily exactly what's been going on here for the past 3 weeks or so, just kind of banging off that upper trend line, respecting it as we're going forward. So we're going to see what happens down here. And again, you might have a little something here at like 230, maybe a 217, that level on the daily, but more or less the 185s is going to be a bigger area of concern for us. As you can see, it's right down here. We had that multiple touch points here right around a couple years ago. So that is what we're looking at below that 200 psychological level. So again, we'll see what happens here on Tesla. Basically, 250 is your magic number in here. Play wisely. Earnings coming up on Tuesday. Maybe we'll get a nice little pop, little run heading into the weekend in here. All right, guys, make sure to check us out on all of our social media. We also have a Discord service if you're interested, and you can find all of our socials in the description below.